Okay. So I'm going to kick it off by saying something a little contentious, which is that I think in the next 30 years, there probably won't be a stock market the way that we have it today. So who are we? We're the Medici Project. My name is Eliot. I'm the CEO and co-founder. I'm joined here by Eric, my CTO, Julia, our Chief Technical Advisor, and Megan Murray, my co-founder and CFO. We're building the first stablecoin investment platform that's registered with the SEC. But when we talk about NFTs, I think quite often in the public view, not necessarily in the Web3 space, but definitely in the Web2 space, people think of it as like, it's a monkey picture, right? That's what an NFT is. It's a bit of art. But as many of you probably realize, NFTs are a lot more than that. They're really like a record of ownership. It's something that I can say, person A owns asset Y, or person D owns asset X. And that's really, as the previous speaker mentioned, it's a container for data. It's something that we can say, this is a record of ownership for anyone involved.
Yeah, when I first started working with ERC 721, it was, it could have been anything. So I was just making games with it, making, these arbitrary, containers of information, and I didn't know it would come out to be like this at all.
Yeah.
Very strange.
Yeah, when I first met Eric, actually, he was building a game, like a gamification of like how we could deal with land for carbon capture. And I was like, oh, you've created like a real estate asset, Eric. And he was like, a real estate what? And I was like, it's a real estate asset. That's exactly what this is.
Yeah, I think that's indicative of a lot of like a lot of people who are in cryptocurrencies, and we have developed our information on fintech in that scenario, and it's not the same when you go over.
Yeah. So I think when we talk about NFTs, what we really need to get people, and especially the financial industry, to understand is that these things are a record of ownership that removes all the middlemen that we have in the financial industry. But I'm going to hand over to Julia, because Julia is a bit of a financial historian on the side, so she's going to kind of take us through where some of this stuff came from in the first place and how the financial systems got so bloody complicated.
So as you can imagine, we practiced this a bit. And when Eliot... just a bit. And when Eliot came up with that opening statement that financial industry as we know it is going to go away, I went like, well, yeah, I've spent my career in financial industry, so I'm biased. But maybe not. So I started working in my head through that. And as Eliot mentioned, I'm a history buff, so I tend to go like way back. So
that's literally not me. So I'm like, I'm not anti-history. I'm just like, tell me more about it, definitely.
I'll tell you more about it. I'll tell you lots more about it. You'll have to stop me.
Yeah.
How
much time do we have?
Well, if you let me speak, we'll get to it sooner.
All right.
But anyway, so how did humans trade back in history? So we don't know how hunter-gatherers did this because they didn't leave any records, and we just don't know. But by the time we get to written records, actually they start with the record of ownership, because there is a wonderful story which we don't have enough time for me to tell in full around decoding of Linear A and Linear B. Those are scripts of Minoan and Mycenaean civilizations, and they did decode Linear B, and they thought it was Homeric poems, and it ended up being the list of products. So like goats, pottery. So the way people traded, it was kind of easy. So you brought your goats and you wanted some pottery, and there was no really issue with trust, because you saw the goats, you saw the pottery, you knew, like, did the guy adds too much sand to when he makes the pottery? And so you know what's going on. You know what's going on in there. So you don't have a problem with trust. You really can just change. What you run into, though, eventually, that the guy who is making pottery, he still wants to eat, so he wants goats. But the guy who has goats has way too much pottery, and he doesn't want to sell goats to this guy anymore. He wants to go buy something else. So that gets us into invention of coins. So coins are nice. They're portable. You don't have to kind of shepherd the goats across the Sahara or something like that. But you introduce the issue of trust. Because how do you know how much that coin is worth? Do you know? And that's why they were made of silver or gold, of some kind of precious metal, but how do you know there is as much silver in this one as there was in that one? So you have an issue of trust. That's the first one. And the second one, there is an issue of transaction costs, because it actually costs money to mint the coin, and somebody got to pay it, and nobody's going to do this for free. So between those two issues, people still handle it, so we have bags of coins walking, like kind of making its way around the world till you get to Middle Ages and people really start getting around the world. And carrying a large bag of gold coins kind of gets dangerous. So you have a safety to your asset because you have a highway robbery, and, road robbery, not highway robbery, and piracy. And piracy is a real thing. Like Elizabeth I, in addition to being Queen of England, had a thriving sideline in taking profits from piracy. So that's kind of a problem. So we get to Middle Ages, and then we get to Florence.
Sounds like Apple.
There is nothing, that's why I like history. There is nothing new in this world. There is just iteration on the old ones. So we get to Florence, and you may have guessed Eliot, who came up with the Medici as the company, he likes Florence and the Medici. So that's kind of actually interesting if you think about it, both NFT and Medici's. So
yeah, so I mean, the Medici really invented what we think of as modern finance. So they took all the problems that Julia's just laid out here, the fact that you can't move coinage, you're going to get robbed, and all of a sudden they're like, hey, what if we just said, Jack here actually has all the money he says he has, and he's going to take this little piece of paper and go do trade elsewhere. So they invented the letter of credit. They also invented fractional reserve banking and a bunch of other things that we use today. So really the traditional financial system we think of now really gets started with the Medici. Fast forward a couple of hundred years, and now all of a sudden you've got the stock market, and basically it's all functioning in the same way. It's, I want to buy something, I don't want to carry a big bag of coins, I certainly don't want to carry a big packet of shares and stocks around with me or anything like that. So I'm just going to go and say, hey, look, you can talk to my bank's going to tell you that I have the money, and you're like, hey, you can talk to my broker's going to tell you that I have the assets. And then, jump forward again, wiring starts happening in the 19th century, and then again to the internet coming out of the 70s, 80s, and 90s, and all of a sudden now we're living in the world where all these transactions are happening lightning speed, but underneath the hood, it's exactly the same process. Every single time, if you're an investor in a company, between you and your company that you invest in, or as the company, between me and you, the investor, there's like several people getting their hand in the pot. There's an exchange, there's your broker, there's the market makers, there's all these people, and then you've got the clearing houses. So just for me to get an asset from myself to you, it has to go through 5 different people. And we have to trust that each one of those people is actually doing things correctly. And quite often, even though we think the financial system's all as strong as it could be, it doesn't happen the way we think it should. There's a lot of loss. So like you'll see asset mispricing happening on Wall Street frequently. Companies will have accounting errors where they can lose hundreds of millions of dollars at a time. And these things happen on a daily basis in the general public. We're just kind of unaware of it.
I know we don't have a super amount of time. Oh.
I was just going to jump in because
Oh,
what we're talking about here is a theme. The theme is that technology advances and business practices evolve. A lot of this isn't necessarily changing the fundamentals of I'm exchanging a good for a service or a piece of gold for an item. I mean, we're just talking about the barter system, really. And so a lot of what we do as a society just evolves, and now we have new technology and we have new ways of doing things that we weren't capable of in the past, but it's not that it's necessarily anything new.
So where do NFTs fit into this? So what NFTs do is they take out all of these middlemen. The concept of a clearinghouse is no longer needed. You don't need someone to check who owns what assets and who has what capital, because the NFTs themselves are the contract. They execute quite similar to Julia's original Sumerian goat farmer and pottery maker. It's really 2 people sitting across a virtual table making a transaction happen real time.
Yeah, it's something that was tickling my brain while you were talking about just the thing that I have to carry around to enable to do that. We don't talk about it, or we have to maybe remember that a lot of the wallets that we use for cryptocurrency that end up storing these NFTs can be held in your brain as a brain wallet. So you can walk distances and not have anything written down on a piece of paper, but then be able to reconstitute all of these contracts. And all of your...
So question, NFT is fine. So you still have an issue of trust, right? So people
Yes.
still can, like as all of that lovely technology evolved, there is lots of break-in. So it's not just people making mistakes, it's bad actors. So how do you deal with that?
Well, I think that bad actors are, I don't know, they've come and they've been a plague of our,
The modern piracy, right?
Yeah, modern piracy.
The modern piracy. So how you defend against modern piracy?
Okay, well, I think that when we talk about like losing something or like being able to like hold those NFTs, I think that we have to just go back maybe in time for like when we have self-ownership of these things.
Does crypto help?
Yes. Well, I think that that's one of the things that crypto is that I have the ability to, not have an FTX type situation where I have my wealth in someone else's hands and I can maintain that sovereignty and that sovereignty of like moving it at will, something that naturally won't happen if I have it over someone else's control. And I think that one-way street of cryptography really stops a lot of people from being able to like inhibit that liberty of sorts.
And Julia, to add to what Eric's saying, I think you're right. You're never going to stop. You're never going to stop fraud, and you're never going to stop theft. Those things are always going to be with us, unfortunately, as Eric said, scourges. But I think what this shift is happening is we're moving away from a financial system where there's additional third-party intermediaries that can make errors, or potentially even have bad actors built within them. By minimizing the amount of people that have to touch the asset, you're minimizing the risk for something bad to happen. Now it's a case of someone stealing directly from me or directly from the counterparty trade, which is very different to how banking's been done historically.
Yeah, and that commingling, that not transparent, this opaque wall of finance that has
Yeah, exactly.
consistently been an issue.
Yeah, because I think if you think in traditional, sorry, Megan, what were you going to say?
No, go ahead.
Oh, if you look back at like things that have happened even recently, right? Look at Robinhood a few years ago. Because of the trading that was happening around GameStop, all of a sudden Robinhood steps in and just stops trading. Now it's doing that because the regulator's telling it to, but it shows just how fragile our financial system is, where at any point a bank or a broker can step in and stop something that you own being traded. You know, in ancient Sumeria, where if I want to go trade a goat for pottery, I can just go do that. No one's going to stop me from doing that. Because if I can't do it in that marketplace, maybe the marketplace bans goats because they smell, I can take those outside the city wall and I can go trade them there instead. Whereas if we're working within a financial system that's controlled by third parties, we as the users of those financial systems, we don't have control over that. NFTs also fix that issue too.
And it's the complexity of the financial systems. I mean, we're talking about all these different counterparties, all these different products. The average person just doesn't even stand a chance. I'm not even talking about crypto. I'm talking about traditionally. Fundamentally, we don't have a curriculum where we learn about personal finance and credit and assets. And even my sister, she was all excited. Oh, I've invested in a Roth IRA 2 years in a row. I said, that's great. And I said, how much is in it? I was excited for her. She says, $12,000, exactly what I put in. And she didn't know that you have to do other things to make it grow or to make the value change. And so it's just a lot of these things that we take for granted as with a background in financial services. There's even times that I struggle to understand the current markets. And now with the advent of crypto, I've met people who have learned crypto first and are now trying to back into understanding what are stocks, what are bonds, and how does that all work.
That's totally me.
And there's nothing wrong with that.
And I think that the point here being that by allowing this to be simplified, I think one of the things that crypto's done is it's taken trading right back to the core principles of two people making a trade together. And I think a lot of this infrastructure, whether it's stocks, bonds, different funds, these have all grown out of a traditional system, partially to deal with individual problems that we have. But the real issue all of us actually have is, how do I buy this thing from this other person? It doesn't matter what it is, that's what I have to do. So I think by bringing it back to simplicity, we're also increasing access to the markets too. We're taking out third-party barriers.
And the user experience too. It has not greatly improved with Web3 tools and Web3 products, but our baseline expectation is that things are simple, easy, as few clicks as possible. Think about Amazon, one-click buying. Investments are not that way in either channel, both in traditional markets or in crypto products. So I really think that as we move forward, that the expectation financially is that things need to be super simple. We need to do everything, design things with the user in mind. And historically, that just hasn't really been done in the financial world.
Yeah, that's partially why people like me have a job, because we try in Web2 world and financial, because we try to make it easy and deal with that. But so, okay, fine. So banks, all of that trading and support of trust and having like a third person or third entity or like 5 third entities confirm that you have what you have and you can buy what you can buy. Okay, maybe. So what about financial advisors? So what about like figuring out where to invest? I mean, it ain't for the faint of heart.
Yeah, and I think we've got to separate here the mechanisms from the system. The fact that, when I say something like, oh, I don't think the stock market's going to exist in the future, everyone looks at me like I'm nuts, which is fair. But the reality is you don't think of just the stock market. The stock market's a big systemic machine, but there's still actions taking place. Those actions are going to stick around, right? It's like we constantly get asked, well, what about market makers? The concept of a market maker is someone who basically sits there and buys and sells to keep a market clean. That's still going to exist. Someone's giving you advice or doing accounting for you. That's still going to exist as well. A lot of these services, like you might get rid of, like crypto could get rid of banks, but the concept of giving a loan and having to do risk on a loan, those things are all going to exist in some form. I think the difference here is that what NFTs allow for and crypto at large allows for is to reduce how these systems function, to make them as clean and efficient as possible, and make them easier, get the access points grown. Because right now, I mean, if I wanted to make a loan today as a bank, it's incredibly expensive. This is why developing countries have such a problem with getting access to capital. When you take out the bank and you make it a much faster, quicker process, all of a sudden you can start doing fractional. You can do banking at a fractional level. You can do trading at a fractional level, and that becomes much more approachable for someone who doesn't have a load of money to come and do this deal.
Yeah, I think that through my, I guess, Bitcoin and overall cryptocurrency like evangelism, I think that it's hard to discuss like the value of like these digital assets in this environment because people don't have a desire or need for it directly, like at least in their everyday lives, because they have like a debit card, then that makes sense to them. But when you have the rest of the world that don't have access to any type of financial instrument, then it becomes like life and death and like a way for you to store your efforts over time.
Yeah, and I think that's a really good point, Eric, is that people forget, when we sit here in the United States as citizens or as residents of this country, we forget that we're in a very privileged position because we have an incredibly strong financial system. It gets a little shaky every now and then like it is at the moment, but generally speaking, we have the reserve currency of the world. We have an incredibly strong financial system, good GDP. If you're living in places around the world that don't have those things, your access to capital becomes much, much harder. And that's why you've seen crypto cropping up in places like El Salvador, where they don't have the kind of markets that we have here. And I think that's one of the benefits here, is that we can see how this technology is enabling the affordability of traditional financial tools that help people generate wealth.
So, question, what do you think? Anybody wants to vote? Is NFT going to replace everything inside in banking system or not?
A little show of hands.
Show of hands.
Yes.
You agree? Is anyone else, show of hands, who thinks that NFTs will replace the financial system? Okay.
Yeah. No? Any arguments to no?
I can add some comments. I do think that the modern change takes time. That's just how it is. And so that doesn't mean that your 401k is going to all of a sudden become on chain or anything like this. I think that we need to get used to the idea of these two things running in tandem and together, and that you can have both. It's not that you have to completely opt into one world or another. That's not the case. There's not this firm line. It's more about an evolution, a different way of doing things, a different way to store value, a different way to continue growing wealth. And like everything, you want to diversify. So that doesn't mean go torch all your assets and collect insurance on your house and put it into Bitcoin. That's not what I'm saying. But it is really just, how do these things coexist together? And how does that translate back to what you need in your life as a person to achieve your personal goals, not even financial goals? We all just want to live our lives. Finance is too complicated. Crypto doesn't solve that, but this is just a different means, a different channel to do whatever you as a person want to do.
And I think to pick up from Megan's point here as well, for those of you who didn't raise your hand, I think keep in mind that change does take time. When you look at the history of the automobile, for example, the automobile was invented in 1880. It took 100 years for cars to really take over the whole of the Western world. We had a period if you were living in New York City in the 1900s through the 1930s, it would have been very common to see horse and carts running around. It wasn't until the 50s when cars got cheaper that all of a sudden they got into the hands of the middle classes, and then eventually everybody else. But it wasn't until the government funded the building of highways that having a car really became like a very reasonable thing to do, to go on vacation across country and go see national parks and things like that. And even up until today, if you go to rural communities, you'll still see horse and buggies, running around places. So I think if you don't think that NFTs or some form of them will take over the financial system, I think just remember that this change, it'll take place slowly, but I reckon it'll probably take place within our lifetime.
So who is going to be Ford? So your comparison to cars. So one of the things that was, I think, Ford, who decided that cars have to be cheap enough that anybody could afford it. So, and that was a huge change maker for making cars more prevalent than horses eventually. So what do you think would be a killer app? Like that was a killer app for horses. Any
I think we'll
predictions?
see a lot of apps creeping out, especially now that we have this. Usually a lot of energy comes out of downtimes like now. I mean, you saw this with all of the applications we have that we enjoy now, like the Ubers and Lyfts of the world. Those all came out of the last financial crisis. And I think this down period right now is we're going to see a lot of these change makers coming about. So I think realistically what we're trying to get at here is watch this space. Take a look at how finance works, think about it, think about how these different tools can be used to replace some of the systems we have now. Just keep an open mind. So I think at this point we should ask, what are your questions?
No, we can't.
Thoughts?
Oh, we're in 3 minutes?
3 minutes. Anybody has a
Oh,
question?
we got more.
Can be answered in 3 minutes?
Yeah, I like that.
Go ahead.
My turn?
Yeah.
So what do you think about the trend in the future? More physical assets, their ownership will be transformed into the NFT form.
That's a great question. So the question was, do we think physical assets in the future will be transferred to NFTs? We're actually already seeing that. I was at an art gallery a little while ago, and they had put a RFID chip into the art, so that when you scanned the art with your phone, it would then bring up the NFT, and the NFT acted as the title. So I think from a titling system, we'll see NFTs. I think Sweden's already started a real estate NFT program. Yeah, so I think
You can't carry a house, you know?
You can't carry a house somewhere to trade it. So yeah, I think these are a very lightweight way of having ownership without having to have like a title, like a car title that comes from the state. You could just embed a chip in your car and scan it for a title instead as an NFT.
What about shares of a company?
I think if you think of what a DAO is today, is that not shares of a company? That's one of the big things the SEC is tussling with. They're trying to figure out, when is it a security, when is it not a security, and that's the whole argument going on at the moment. But a lot of DAOs that are sort of for-profit entities, their tokens do act like shares to some degree.
Yeah,
So we're already seeing that.
Even if that specific token doesn't carry its own dollar value or any other like Ethereum value.
And I don't think it'll be too long until companies that are planning to do direct listings realize that doing it, as long as they have to do the SEC paperwork, which isn't even close to the most expensive thing of taking a company public, they'll realize that they can minimize the amount of lawyers they need and issue through these systems. It's going to be a game changer. Okay. And I think we're out of time. So thank you very much. You've been very attentive. Appreciate it. And please feel free to find us. We'll be outside if you have any other questions.
Thank you.
I just was double checking because of your LinkedIn as your PFP.